Hello everyone and welcome to your Onchain update for the 4th of October. So what I want to cover today is looking for Confluence and how we can use a series of on-chain metrics through a series of different concepts to really build a case as to whether we are actually seeing a bear to a bull transition. So for those of you who are short on time, the answer is we are not there yet, but it's kind of interesting to actually see on what basis. Are we looking at it from on-chain activity? Are we looking at it from momentum in terms of price action? A series of things. And what we basically want to do is line up as many of these things as possible to have that confluence, which ultimately gives us confidence. So Confluence really is king. And what I've designed this particular set to do, this series of dashboards, is essentially looking across multiple parts of the stack to try and identify when we actually do have a strong and robust on-chain activity. When are we seeing increasing momentum in profitable spending? When are we seeing that switch over between the balance of wealth held by the hot money back towards the older money, people who are more willing to sit around? So we're essentially looking for lining up as many of these elements as possible. You don't have to line all of them up, but generally speaking, we're looking for the correct trends in the correct places to really just see whether we do have that positive momentum. So let's get into it. So this is the dashboard. So this pretty funky looking rainbow chart is essentially picking up four different components. So we're going to look at this from spot prices. So where is price relative to some important pricing models, really signifying have we transitioned? And remember, I'm not here looking to pick the bottom. I'm also not looking to pick anything aside from is the momentum transitioning from a bear to a bull. Now this is not going to pick the absolute bottom tick. It may also not pick the absolute breakout from the bottom. So these dark blue zones you can see is essentially honing in on where we're starting to pick up that you have a high degree of confidence. You can see we didn't get the very bottom tick here in 2019, but we do have most of the move. We're trying to catch the meat of the move. So as I mentioned, we're going to look at pricing models. We're going to look at network momentum. So on-chain activity. Do we have more people coming into the network? Is there that positive and constructive momentum? Do we have profitability returning to the system? And this solves two problems. One, have all the people who bought the top been flushed out, seller exhaustion? And the second part is profit being taken and the market is strong enough to absorb it? And the last one is, do we have sufficient USD denominated wealth invested in this system translating to those older hands? People have held their coins for 1 to 2 years. Do we have enough wealth concentrated in those long-term holder hands relative to the rest of the market? So they're the kind of four categories and they're each color-coded. You can see here I've got green, yellow, blue, and red. So we'll start with green looking at spot prices. So the high level to take away from this chart, you can see that typically we sit in all of these things during the bull, right? So it picks up the start of the bull and carries it. This is where we've got all of that confluence. When we have the light blue, it's basically saying that we have at least two of those parameters in check. So all down the bottom here, you can see those barcodes. That's different parameters that have been hit. And the darker colors is where we have all four of them. So really what we're trying to do is line up as many of these things as possible. And obviously there's certain metrics that are going to have more importance. But what we're trying to look for is that confluence between multiple different metrics at the time. But you can see that in our current market, right now, we do not have any of them firing. So it's actually telling us that we're not there yet. We have not hit that point in positive uptick across any four of these metrics. So let's start digging into what they actually are. So the first one is the realized price and the 200-day moving average. So as I mentioned, we're not looking to pick the bottom. Even though we don't have any of these signals firing, it doesn't mean that where we are right now isn't a value zone. However, if you're looking for that confirmation, that kind of time when, if you're happy just sitting on the sidelines and you want to actually be sure that there's a pretty good odds that a bull market is back in effect, and you're more than happy to just sit tight and give up the first. Sometimes prices can rally 100% off the bottom, but if you've still got another 1,000% to go beyond that, who really cares? If you're removing that risk of downside, that's really what this toolbox is for. So the first suite is, are we in price back above both the realized price and the 200-day moving average? Now, this tends to converge. As you can see that the 200-day is currently on the way down. It's up here at 28,500. The realized price is currently sitting just above us, about 21,200. So really what we're looking for here is, I'm sure we'd all agree, if we manage to get up above 28,000, really 30,000 is going to be a bit of resistance, but we can all agree that's probably a period of time where it's like, all right, now things are starting to look a little bit healthier. That is a significant rally off what could be the bottom. Now, we also can see that these tend to converge towards bear market bottoms. So this also tells us, and we've been talking about this for some time, we may well just have some duration in us. But really, we want to be above the realized price, which puts the market back into profit, which will obviously have impacts on the profitability later on. And above the 200-day. Why? Because every macro, micro, mini trader in the world understands the 200-day moving average. It's a very, very common bull bear indicator. Is asset above 200-day? I'll think about it. If not, don't care. So this is the way that many fund managers, big picture guys, they will need that 200-day moving average to be ticked over. And because it's so widely observed, it has that psychological effect where people go, oh, look, we're back above the 200-day. That gives people confidence again. So, again, we're not looking for bottom picking, but above realized and above 200-day, that's our first tick in the box. As I said, we're not there yet. Now, the next one, which is a little bit more constructive, is new address momentum. So when I talk about momentum here, what I'm looking for is we've got our yearly moving average here in blue. We're looking at new addresses, right? So this is just activity on the chain, right? How active is the Bitcoin network? The red is our monthly. So if you think about this, we're looking at a short-term versus a long-term moving average. You'll find this all throughout technical analysis, and it actually works remarkably well for on-chain activity. So what we have here, you can see during the bull market that the monthly was essentially higher than the yearly, right? And that makes sense because the yearly is going to be climbing, the monthly is up, we're seeing more momentum month on month. And note how it dies off as we come into the top here in April. And actually, this thing signaled before we had our 50% sell-off in May. So this thing actually works on both directions. However, I'm going to focus here really only on that bear to bull transition. So we're looking for an upwards cross. So you can see that we got one of those nice and early down here at the bottom. This is showing that people are seeing value. People are coming back into the network. There's more excitement. People are like, hang on a second, this is actually now in the value zone. Now, anecdotally, I've spoken to a number of funds and a number of people, and I've seen people on Twitter starting to become increasingly bullish on Bitcoin. We're seeing people starting to come back in. We're not there yet, but we're seeing people starting to enter back into the system, think, oh man, Bank of England's now doing QE and the Japanese central bank's in a bit of trouble. So there's a few rumblings, but as I said, we're not quite there yet. But you can see here that we are getting to the point of almost crossing over. So this is not a bad little signal. It's not there yet, but it's close. Remember, that would, even if we did tick over, that would only be one in the box of new address momentum. Now, because I really want to make sure that we actually have a signal, for many of these things, I actually combine them. So I have more than one signal that has to fire off at any one time. So to kind of balance that, you can have all these addresses coming in. That's great. But is there enough to kind of fill the blocks and create congestion? This is where I introduce the fee revenue momentum, which is exactly the same concept. What we're looking for is, do we have more fees on a monthly basis than a yearly basis? And right now we remain in the red zone. You can see that the bull market is pretty clear. And you can see here that it's basically signaled after the COVID collapse and recovery. So in theory, you would have missed all of this dip. However, once it signals, it sits in the trend for pretty much the entire sweep. So it gives you that confidence to actually get in reasonably early and stick with the trend. Right now, we are not there. You can still see that fees, they're a little bit up, right? It's not the worst sign. There's a little bit more congestion. It aligns with this. We've got a bit more action as we come closer towards what could be a fairly textbook looking Bitcoin bottom, but we haven't yet tripped over that wire yet. So we don't have a dual signal of address momentum and fees. However, it's one of the healthiest signals that we do have so far. So green shoots, but certainly no trees coming out of the ground just yet. So now moving into spending profitability, right? So what we're looking for here is the market essentially taking profits and absorbing it? That's kind of the key. Now, for both of these metrics, I'm looking at the aSOPR, which is the spent output profit ratio, basically the profit multiple of the industry. Look at all the transactions, change adjusted. Look at all the transaction volume. What's the average profit multiple, right? Below one is a realized loss. Above one is a realized profit. So if we're getting realized profits, that's showing that the market can absorb it. There's some kind of demand coming in. But also when people are making money, they're more likely to say to their friend, hey man, I'm making money. So you get more people saying to come in. So I've applied here, as I mentioned, we're not bottom hunting here. We're looking for momentum and a positive, reliable signal. So I've got a 30-day moving average applied here. So really all I'm looking for is aSOPR on a 30-day moving average above one. And right now, we still are hovering down in this sub 1 zone. So what this is essentially telling me, and you can see here in 2018, we stuck down there for some time, 2020 as well. This is basically saying that we still have people in loss having to sell, right? We have not exhausted those final top buyers. We're still flushing them out. It takes time, which means they've got to sell, someone's got to buy. That takes demand out of the market. Someone's got to sell, someone's got to buy. So until we've exhausted those sellers, the marginal buyer, the hodlers who just keep chipping away, they're essentially absorbing some guy who wants to get out. Whereas once we move to that more profitable territory, they're essentially taking someone else's coins that they had on an ask rather than a market sell, get me out of this thing at a loss. So we essentially were still in the purge phase. Now the next one is very similar, but we're looking at the realized profit to realized loss ratio. In some of the previous videos, you'll see me talk about those area charts. It's realized profit and loss, and I want to see realized profit exceed realized loss. That's essentially what this is showing in an oscillator. You can see very, very similar pattern to aSOPR, but coming at it from a different angle. What we're seeing here is that we also, on a 30-day moving average, have not broken back above 1. We have not purged top buyers yet. We're still in that process of flushing them out. So again, it's another signal that's not there yet. We made an attempt, but we weren't quite there yet. So, alongside many of these metrics, time is kind of that last factor. And as you can see, the proximity of this back to breaking above 1, it's actually not too dissimilar. It's got the same gut feel to how the 200-day hasn't yet come and met the realized price. So it's kind of in that middle phase where it's, probably talking about 3 to 6 months worth of just like time and chop and just trying to work our way through whatever it is before a lot of these things are really going to tick up. In fact, it could be less than that, but that's kind of my time frame for where I think these signals are currently sitting at the moment. And the last one I want to touch on is the RHODL ratio. So this is a few different manipulations I've done on it. Basically, what I'm looking for here is when is the trend in 2 directions. I want to see that there's a huge balance of wealth held by 1-year-old coins versus hot coins or 1 week old, right? I want to see the balance of wealth shift back towards the hodlers. Now, what this is basically signaling is that we are pretty much in that zone. We are seeing that the hodlers now hold a dominant majority of the coin supply. So the first metric up here is actually one of the few that is signaling. This is saying that we now have a very, very healthy and sensible and quite strong and robust holder base. So that's check number 1. Check number 2 is actually somewhat aligned with our profit and loss. I'm glad that we have a whole lot of hodlers, but I also want those hodlers to be making just a little bit of money. So what that means is that I actually want them to be spending some and the market to take that and absorb it and punch through it. We haven't got that yet. So what this second metric is basically modeling is, are those hodlers, yes, we now have a healthy balance of wealth with the hodlers, but are they able to take profits and the market push through it? And we're not there yet. So essentially we have 1 out of about 8 metrics that are currently signaling thumbs up. Overall, longer term, all this is looking reasonable, right? We've got momentum starting to pick up. We've got a nice balance of wealth, but what we don't, and we've got recovering profitability, but it's just not there yet. The last component here is time. Now, the remaining variable in this whole mix is, do we need a capitulation V3 to kind of get to that final seller exhaustion? You can see that there's still people who are hanging on to hope, and some people are finally just throwing in the towel and exiting. So we're not there yet, but certainly an interesting model. Now, I'll leave this for anyone who has a Glassnode subscription. Anyone who has advanced will be able to access all of these charts. Most of these, in fact, I think all of them are workbench charts, so you can open it up on the top right here and actually see the individual metric themselves. I've also got a whole suite of guides here. This is something that I'm building up in the background. I'm going to have 4 of them. So please, if you do have any comments or feedback and you actually, find this useful, do let me know, because it's useful for me to build up more of these types of things that kind of distill it down into a binary: is good, is bad. But we're going to build out one that's this is the bear to bull transition. We're also going to look at, finding the bull market tops, right? Trying to identify the actual cycle top. One to help you survive during the bull. So essentially staying in the trend, right? Finding mid-cycle correction tops, and then also finding mid-cycle correction bottoms. So essentially sell the local top, buy the dip type thing. And one that we also need to build is finding the capitulation low, right? Trying to identify that point of like, all right, pretty sure that's a bottom tick. So anyway, there'll be 4 that's trying to capture the life cycle of a Bitcoin market. So do let me know if you find this useful, and I'll see you in the next one. Cheers.